Hey guys, how's it going? Another podcast here with Bob and Phil as always. And guys, we're going to talk about something today that the central banks or governments have no power to control when it comes to inflation, specifically food inflation, and it's coming. We're going to talk about that in this video, so let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Okay, Bob, I know you look at a lot of weather data. Let us know what's coming down the pipe.
Yeah, so this is really interesting, Phil. I mean, this is the whole reason why we started Trade Genius in the first place, is because of the global solar minimum, and being in California is usually such a boring weather environment for us. But last year, we had a really weird what's called a La Nina, which was called a Modoki La Nina. It's not to bore everybody here, but it's the type of La Nina that actually causes incredible rainfall in both Asia and in Western United States, and that's what happened. And it affected the rice crop in Asia, which we already talked about last week. But we went from that Modoki La Nina to, it looks like, a moderate to strong El Nino. And you just have to go ahead and go Google the years we had strong El Ninos, and you could just see the ravages that an El Nino causes. I think we're going to have the chart up there. They said little boy, big trouble. And it's really disruptive. And so you're going to see floods in the Middle East. You're going to see a drought in Asia, in Australia, and India. And why that matters is because those countries, Australia produces more food than they consume. But you're talking about India and you're talking about China that does not, and they're going to have a big shortfall, Phil. So it's going to be a problem.
So you got this chart here that kind of shows since 2000 the effects.
Yeah, it's amazing. And this is in India. I pulled some data up on India just to show you that, they already had 1.2 million acres of their wheat crop got destroyed by hail earlier this year. And they're going to roll right into a El Nino related drought going into the fall. And so it's going to affect their rice crops. And you can already see it on the next chart that we're going to pop up. Rice and wheat are already moving up higher, and it's just going to get worse. And when we go into next year, India is not going to produce enough wheat, and Australia is not, and China probably will not as well. And it's going to become a big problem, Phil. And in fact, they even show India, they call it the bane of El Nino for India. And you can see every year you have an El Nino, you have a reduction in crop. And this is the worst possible year because we're already having shortfalls because of the conflicts, in Central Asia, with Ukraine and in Russia. At the same time, now China's getting a shortfall, and now we're going to see this thing kick up, and Australia is going to join the party. I just want to show you guys the map. This is the map off of Peru, and this is the departure from normal, and that's pretty brutal. And Phil and I were talking before the show here. Pre-production, as they say in the biz, it's going to light up the heat for California and also off of Mexico. And that area between Mexico and Peru is the breeding ground of hurricanes that run into Hawaii. And it's going to, Gulf of Mexico is going to get very warm too. So the storms that are going to come off from Africa will likely get sheared off, Phil. But the storms that will form in the Gulf will form up fast and hard and quick before they can get destroyed by when El Nino comes in, it basically cuts off the trades. and so it messes up the winds for hurricanes. But the hurricanes that do form tend to be stronger than normal, Phil. So it's going to be a really interesting year, and typhoons will be less to feed the monsoon for China. So they're going to probably have their rice crops probably going to suffer.
Let me ask you, so is this going to be a moderate or stronger than moderate El Nino?
A minimum of moderate. So they will know more in 3 months whether it's going to go to a strong El Nino. But moderate is bad enough. The ideal for the world is weak El Nino or weak La Nina. But because we're going into global solar minimums here, these things tend to be amplified, Phil. So we're probably going to get a moderate to strong El Nino this year.
Well, yeah, because the reason why I ask is that if we go back to this Bain of El Nino chart, the moderate years is the rice production gets hit pretty hard. 2002, 2009. I remember the prices going up in Hawaii, which is a big consumer of rice in the 2009 dip. But the point here being that, like you mentioned earlier, the timing of this is really bad because we're already dealing with inflation that's really, really high, higher than we've seen in a really long time, and especially on the food side of things. And so this is going to put added pressure on it, more so for the global economy, I think, than here at home. But that, what affects things globally is going to have an effect here as well. So I just think it's another one of those things where the timing of various things that we've been going over the last couple of weeks, whether it's debt ceiling or inflation or food, it's all coming together. That's usually what happens in these recessions and depression. But that's usually how these things happen. Everything comes together at once unexpectedly. Weather's definitely always been a wild card. And could you imagine big weather anomalies wiping out crops? I mean, that's, I think, the one thing the Fed's probably deathly afraid of, and they'll never talk about it. They never talk about food crops. They never talk about weather. I bet you that's like their number one concern, though, because of you don't have a lot of breathing room now in terms of tools to fight inflation.
No, I mean, what are you going to do? Raise interest rates in a supply crunch?
Right.
But you're right, Phil. And I think this is the reason why maybe you and I are more macro bearish than we normally would be, is that we're running out of safe havens.
Yeah.
I think tech's probably very sensitive to interest rates, and that's starting to bite. Mm-hmm. And I think, the geopolitics of the social media, the United States has their own different issue. In Europe, they would love nothing more than to totally control these social media companies, wiping out profitability because they're big into privacy and data sharing and censorship and all that stuff. And in Asia, China has their own thing. So I think, we're seeing very few areas where we're going to have growth. And even energy now, you're starting to see that with the recession coming, there'll probably be an abundance of supply. But food, if you lose your job, and food prices are going up and interest rates are going up, I think the pressure is going to be, I think it's going to be incalculable. I think we're really going to come into a perfect storm, to pardon the pun.
No, I agree. So Bob, bouncing the markets today. I think maybe the lows in pre-FOMC, and then we'll do the FOMC thing on Wednesday. That's where I think the bigger risks for the markets are as we move forward into May. Maybe it's a sell in May and go away. It might have more meaning this year. Yeah,
and just so you guys know too, because you only hear us talk on the podcast, yesterday going into the close, we closed our short position. I think Phil had 115 point
roughly.
Yeah, on ES, and I closed my shorts. I went long. Actually, I went long and closed my longs early in the day. I didn't expect. Bounce was an understatement. They basically read October just thing with a crazy Ivan right back up to the Monday high. The Monday close. So now, tonight, Phil, if we can ramble a little bit, is the Japanese central bank announcement, which could throw some sand in the mix. But if not, then I agree with you. Friday, Monday, Tuesday could be flat to up. They have to absorb. This is a pretty big day up today, on the earnings. So if the Japanese can really mess things up, if not, then I agree with you. Then Wednesday, another quarter point in the bag. Probably the way things are going, the risk on people they're just jamming it in. It's almost like they're daring the Fed. There's nothing you can do, brother.
Yeah.
We can just keep jamming you, and all it's going to do is they're going to probably say in June they're likely to raise again.
Yep.
And that's what you and I have been saying a year ago. They're going to raise rates into June, and with the July meeting would be the last of it. And I think then at that point, we'll be in full-blown recession mode. Remember, the stock market and the economy are two different animals,
right,
and they align with each other late.
Mm-hmm.
So, we're already seeing, Amazon reported had great earnings, but what did they do? They laid a bunch of people off at Whole Foods.
Mm-hmm.
and then 3M laid off a bunch of people, so it's just, it's this constant deli slicing off until you don't have any lunch meat left.
Yeah, I think Japan's announcement tonight is going to be hugely important because that they are the last of the easers, right, globally. So if they pivot, and they have a new governor, right? They have a new central bank governor now. So if he's decided enough is enough, and they're going to start tightening, that's it for the last of the easy money. You can remember the JPY carry trade. People use the cheap yen as a way to make money and gain interest rate. So basically borrow cheap yen and gain interest in your own currency, whether that's the Aussie dollar or the US dollar. But if they start tightening that carry trade goes away. That has big ramifications on global markets and would be a negative effect. So if you guys are interested, you pay attention to the news wires that are going to be talking about the policy changes tonight. Sometimes that comes out at 9 p.m. Eastern, sometimes 11 p.m. Eastern. They're very coy about the exact timing of it. They always have been. So it'll come out. But if you see, like, if there's futures reaction, that's typically what it's going to be, especially if there's a big policy change. If they say nothing's changed and they're going to continue to ease for the foreseeable future, then this melt up can continue. We may even crack 4,200 going into the FOMC meeting as well, just because of the way things are positioned. After that, though, I think, Bob, we got to be very careful to the downside.
Totally agree, Phil. Hey, thanks for listening, guys, and hit like, subscribe, notification, and check us out. Hey, and those are the guys that send us emails on the geopolitically safe commodity miners and drillers. Those things are going out today. That if you gave us your email, we're going to get those out to you today. I put that list together. Those that are interested in that, just send us an email at tradegenius101@gmail.com and let us capture your email and send you some information. That's pretty interesting. Is these are the companies that are not necessarily these are buy-sell signals, but these are the drillers and the commodities in countries that are going to be relatively safe from property rights standpoint. So let us know. Really appreciate the amount of people that responded, and just send it to us and we'll get the information out to you, and anything else in the future that we think might be of interest to you. Have a good one. Thank you.
Thanks, guys.
Trade